Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Joining the $1 trillion club, a breakneck surge in memory chip makers powers global stocks to a record high as SK Hynix and Micron pass the valuation milestone. Oil dips as US officials continue to claim progress in talks with Iran, even as the status of the Strait of Hormuz remains uncertain. And Paxton picks up the primary. President Trump's choice for the Texan Republican nomination thrashes his opponent, the first defeat of a sitting senator in the state since 1970. Well, a very good morning. Here is the picture in markets this Wednesday. The easing geopolitical tensions boosting stocks and futures on the hopes that inflation pressures will ease. But Asian stocks in particular off to the races this morning. We're up 1.1% at a record, fueled by the chip rally. The S&P yesterday hit a fresh record in the session. So this has gone global, and we've got futures pointing higher on both sides of the Atlantic this morning as well. Now, flip over to the cross-asset picture and you can see oil dropping on the progress in the Middle East talks. Brent now trading down 1.6% at $97.99 a barrel. That despite the overnight strikes. Treasuries holding on to gains, so the 10-year down 2 basis points at 4.46%. And the yen trading at 159 per dollar. Traders really on alert for yen intervention. Now let's look at the risk events on the agenda for today. At 7:45 a.m. London time, we're going to get the April French consumer confidence figures. Before at 9 a.m. London time, it's the European Central Bank's financial stability report. And then at 9 p.m, we shall get a read on software. That coming from Salesforce out of the United States. Let's set you up for the day ahead. We begin in Asian markets at a record this morning. We can go straight to Avril Hong in Singapore. Avril, what's powering this rally?
It is memory chips, right? That insatiable demand for the stocks of memory makers. These companies, a handful of them with a lot of pricing power, and they can pretty much dictate the extent in which we'll see that intensity of the AI data center infrastructure build out. So that is what's powering the gains, the outperformance in South Korea, Taiwan's gauges today. But you also flip the board, take a closer look at how the stock of SK Hynix, this is a stock that has achieved that $1 trillion market cap now. So a couple of weeks after Samsung joined the club, and of course more recently this week Micron. And then for positive sentiment also on the margins from Samsung, thanks to the labor union now saying that chip workers have agreed to a wage deal. So this further helps to stave off the risk of strikes. Overall, this is a positive backdrop for the global chip supply, but there are some of these less positive implications as well. You think about how the memory boom and the costs have actually eaten into some of these companies' profits, including Xiaomi, which saw its profits plunge for that very issue. You are also seeing some of these Chinese internet stocks on the downward trajectory, no thanks to the concerns about China, the crackdown there. Flip the board again. Think about as well when it comes to the AI boom. We have the likes of Bloomberg Intelligence talking about how in South Korea, given these chip bonuses, that could fuel housing prices, inflation, and then the BOK, Bank of Korea, might in the third quarter of this year pivot to a rate hike. Tomorrow it's set to meet, expected to leave things unchanged though. Today we also had the RBNZ, likely also, likewise it also left things unchanged, but you had a bit of hawkish signaling. So you are seeing the outperformance in the Kiwi dollar versus the greenback. Korean won also doing quite well today. Lizzie?
Avril, thank you very much. That's Bloomberg's Avril Hong. Well, let's take it global now. We just heard about SK Hynix entering the $1 trillion club. Micron doing the same in the US session yesterday. Let's go to Bloomberg M Live strategist Ben Ram now. Ben, good morning. This momentum for tech hardware stocks really seems to be overshadowing geopolitical concerns. Is it just that we needed an excuse when it comes to the geopolitics to focus on the tech?
Morning, Lizzie. I think that, everyone's forgotten about the tensions in the Middle East, the war in Iran. Now, investors are squarely focused on the one thing that you mentioned, which is memory chip makers and anything remotely connected to AI. I think that quest for winners is going to continue because, it's been a trade that it's been a gift that's been giving for the past few years at the very least. So I think that that's going to continue. Interestingly, Lizzie, NASDAQ 100 reached fair value yesterday, and at 30,000, it's fully valued on my model. So I think that, investors should get circumspect from here. But the bigger point, Lizzie, is that, the markets are looking for the next 10 bagger. And I think that, they are turning over names that previously were completely unknown. I'm not talking about Hynix, but some of the smaller cap companies in the US. They're showing up everywhere in social media feeds, companies that no one has ever heard of. But because these have something to do with memory or AI, I mean, a classic case in point is Allbirds, which said that it was diversifying into AI. And they saw the market cap surge 7 to 8-fold, and just 1 month later, it's come crashing down. So I think in a market as rewarding as the NASDAQ and the S&P, the NASDAQ has trebled in value in the past 3.5 years. It's better to stick to beta, which is just a broad exposure to the market, rather than this unending quest for the next 10 bagger, which can leave investors with their fingers burnt when the tide turns out.
And as you say, for the Nasdaq, we're past the 30k mark, and futures pointing even higher this morning, up another 0.1%. But then I also want to turn to rates, and Japan in particular. We've had a 40-year JGB auction. How is it received?
It went off without much of a hiccup. I think that, there was demand from real money investors and life insurers. So I didn't see much of a hiccup before the auction. So I had no doubt it would go through, and it did go through. But I think that, with the performance in the auction masks what is really going on in the secondary market. In the secondary market, across the breadth of the curve, the 2-year to the 30-year, they're all trading at a considerable price discount to US Treasuries if we fully swap out the yields into US dollars. So I think that, the markets are wise, and they're caught on to the fact that the Bank of Japan is heavily behind the curve when it comes to fighting inflation. And as long as the BOJ remains reluctant to correct that, I think that JGBs will continue to trade at a discount.
Okay, Bloomberg M Live strategist Ben Ram, thank you very much for that analysis. Well, turning now to the geopolitics. The US is touting progress toward a peace deal with Iran, even as fresh hostilities and uncertainty over the vital Strait of Hormuz persist. Security in the waterway remains unclear after the two sides exchanged strikes earlier this week. We can go now to Paul Wallace, Bloomberg's managing editor for Middle East and Africa. Paul, good morning to you. So you've got peace talks and military strikes. What are the remaining sticking points in the negotiations?
Hi, Lizzie. Yeah, so we are in this pretty confusing passage of play at the moment, where you've got peace talks and strikes, as you mentioned. Some of the key sticking points, and there are quite a few here. One of them is Iran's frozen funds. Iranian media said yesterday that it expects $12 billion of funds to be unfrozen as soon as there's an agreement, and another $12 billion to be unfrozen sort of throughout the ceasefire, and it's probably going to be a 2-month extension to the ceasefire. Lebanon is another one. What exactly happens with Lebanon in terms of a ceasefire? Iran is insisting that the truce an extended truce should include Lebanon, where Israel is fighting Hezbollah militants. Israel is going to be reluctant to agree to that, and in fact has stepped up strikes on the Arab country in recent days. And the other one, of course, is the Strait of Hormuz, whether or not Iran will actually allow free passage of ships through the vital waterway. Iran is, and has been since the start of the war almost, it's sort of insisting having some kind of control over maritime traffic. And its most recent comments say that it won't toll the traffic, it won't toll the strait, but it wants to charge for navigation services, which a lot of people will see as very much akin to a toll. That's something that the US is almost certainly going to reject, as well as Arab states like Saudi Arabia and the UAE and Europe, and frankly, most of the world. So those things are key sticking points. And I haven't even mentioned Iran's nuclear program. That would have to be negotiated after this interim agreement. And there's no guarantee that if they can get an interim agreement, they can also, achieve success with talks on the nuclear program.
Which raises the question of whether the US is any further forward on Iran than when the war began. But what's the current status, Paul, of flows going through the Strait?
So flows have picked up a bit. I mean, before the war, you're talking about 130 ships going through each day. Iran is now claiming that roughly 25, 30 ships are going through with its say-so and with its help. It's hard to verify this because a lot of ships go through by turning off their transponders. It's also a bit controversial because Iran has been requesting charges from some ships, and the ships that are going through are pretty much all denying that they're paying anything to Iran. So we don't know for sure, but clearly there has been a pickup. But even if we are at 30 ships a day, say, we're still way below what we were before this war. So we're not really at a level where the global energy markets and the global economy are seeing some relief.
OK, Bloomberg's Paul Wallace, thank you very much for the update as we await that potential peace deal between the two sides. But still ahead, UBS investment bank's Anna Titareva will join us to discuss the latest in European economics. Plenty to discuss for the ECB and the BOE. But first, President Trump's choice for the Texan Republican nomination thrashes his opponent, the first defeat of a sitting senator in the state since 1970. So we'll get to that historic defeat next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To US politics now. Texas Attorney General Ken Paxton has stormed to victory in the state's Republican Senate runoff, defeating incumbent John Cornyn. With about three-quarters of the vote counted, Paxton won approximately 63%, helped by an endorsement from President Trump.
Tonight, we just sent a Texas-sized message to Washington. I said it in March, and I'll say it again now. Today, change was on the ballot, and change won.
Let's put this in context now. We can cross to Bloomberg's John Herskovitz. John, what does this victory for Paxton say about Trump's grip over the Republican Party?
It says it's as strong as ever, especially when it comes to primaries. This Trump endorsement is the third one in the past few weeks that has led to an incumbent losing office. We had Cassidy in Louisiana, Massey in Kentucky, and now Cornyn in Texas. And the thing is, when it comes to support for Trump, Cornyn was actually quite supportive of Trump, usually voted with him on almost every issue. The thing is, he wasn't as enthusiastic in his support as Paxton. Cornyn is also considered part of the establishment of the Republican Party, which has been doing battle with MAGA for years. He's considered part of the Rhino group, Republican in name only. So this ends the cycle for these establishment Republicans in Texas. The Bush family is at the front of this. They've diminished in importance in Texas over the years, and we see the emergence of this Paxton group over the past several years. And the nail in the coffin for the establishment is the ending of Cornyn's run for Senate, which happened with this thrashing at the hands of the Trump-backed Paxton.
So then how's the Senate race in Texas shaping up between Paxton and the Democrat, James Tallarico?
Yeah, and there are lots of interesting numbers to play. If you just look at some of the funding numbers, Tallarico's done really well. I think he's at about $27 million over the first 3 months for fundraising. This is more than most Senate candidates will get for the entirety of their campaign. Paxton had a bruising primary, a bruising runoff. Texas is an expensive state. I think he's at about $7 million. Before the Trump endorsement, a University of Texas poll showed that Tallarico was ahead of Paxton. So those are the numbers on one end. On the other are the bigger picture numbers. A Democrat has not won a statewide election in Texas since 1994. a Democrat has not won a Senate election since, I think, 1988 with Lloyd Bentsen. The state leans Republican. It's a heavily Republican state. It's an uphill battle. As soon as the election results came out, the Republicans renewed their attacks on Tallarico. But Paxton has a lot of baggage. This is what Cornyn tried to bring up in the campaign, and it'll probably be an issue as they go. This will be an issue as they go forward towards the general election.
Okay, Bloomberg's John Herskovitz across it for us, as always. Thank you very much. And coming up on Daybreak Europe, why China appears to be dragging its feet on approvals of Airbus plane deliveries. We'll get to that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:20 a.m. here in London, and we turn to transport now. China is said to be stalling approvals for Airbus plane deliveries over the pace of European regulators certifying Chinese-made aircraft. Bloomberg understands that over the past few months, China has been delaying final approval that allows the jets to enter the country and start service. Let's get more detail now. We can speak to Bloomberg Asia aviation reporter Danny Lee. So, Danny, what more can you tell us about what China's been doing here? And really how Airbus is reacting?
Hey, Lizzie, good morning. So China has been applying a form of economic pressure to signal its displeasure and disapproval to Brussels, and by roping in Airbus, the European plane-making giant, to try and speed up or get an impasse broken on getting caught up in European bureaucracy, the certification of the Comac C919 jet, which rivals Airbus to all intents and purposes. And China wants this process, this certification process, speeded up. And this has been going on for years now, this certification process. So it's an impasse at which China has sought to break by applying pressure on Airbus, specifically by getting new plane deliveries delayed from entering the country. What this has ultimately meant is that Airbus has seen first quarter plane deliveries this year fall to the lowest since 2009, and the number of aircraft going into China collapsed to about 16 so far in the first 5 months of this year, compared to like 47 at the same time last year. So it's a big, big difference. And the fact that Guillaume Faury, the Airbus CEO, has actually since come to China in April to meet with regulators. It's part of the process of which he has sought to at least break the impasse, at least. And he has since said that they expect all of these administrative issues, as he cited, to be cleared by the end of June.
Well, they hope, they expect, but what if tensions persist or escalate? What happens then?
Well, Airbus needs China as much as China needs Airbus. At the end of the day, I think even with this news coming out now, I think there is a kind of a soft signal that all of the issues, or most of the issues at least, are resolved. The fact that we have started to see a pickup in planes being delivered into China now. We see that in the monthly numbers, but still a long way to go. And even in the last couple of months, the fact that Airbus has won hundreds of plane orders from Chinese airlines, now this would have to be sanctioned and approved at the highest levels of the Chinese government. So I think you can be reassured that there is a kind of more normality in relations and ties here, and everyone getting what they want. But we will have to watch closely in terms of the monthly numbers and deliveries of what Airbus delivers into China, that things are truly back on track.
OK, Bloomberg Asia aviation reporter Danny Lee, thank you very much for that update. Well, let's turn from planes to cars. European car sales climbing for the third consecutive month, rising 7% to 1.15 million in April. This as consumers continue to snap up more electric and hybrid models. And we can go now to Bloomberg's chief Europe correspondent Oliver Crook for analysis of these numbers. So, Ollie, is it fair to say that the Middle East war is boosting demand for EVs but denting overall demand for cars?
I mean, listen, I think it's hard to have a full appraisal of what the impact of the war in the Middle East is going to be on these car sales. There's certainly a logic to the idea that if people are freaked out about the price of oil, about gasoline, diesel, these sorts of things, that, potentially in the long term, they're going to want to move towards something of an EV. Whether or not the sort of war has done that is another question. In terms of denting demand overall, as you can see on the board there, this year so far, I mean, you've had a war for a large part of this year, and that would generally, you'd think, put some sort of pressure on consumers, maybe not wanting to spend on big ticket items. But you can see there, April sales up 7%, up 11% the month before, almost 2% the month before. It's been a pretty good, strong start to the year here for Europe in terms of the car sales. What I think is really interesting, Lizzie, is if you go into the engine types, what is actually selling? Battery electric vehicles up 38%, almost 40% in the month of April. Hybrids up 12%, call it 13%. Petrol and diesel, both down in the double-digit percentage, down by 15% for petrol, down for 17% for diesel. And another stat, when I was pouring through these numbers, Lizzie, in terms of battery electric vehicles, the number of vehicles sold in April, 255,296. Petrol vehicles, 255,900. There is now about a 600 vehicle spread in terms of what is selling in terms of petrol and battery electric vehicles. So you're really seeing those hybrids and those electric vehicles almost taking over from the combustion engine.
And who's winning in terms of the brands?
Yeah, so this is the big question. Obviously, we follow the brands very closely, and obviously we've been reporting a great deal on how much difficulty there's been on the German market. In terms of the actual brands themselves, we look at them. Volkswagen was up about 3.5% in the month of April. Mercedes up 7%. But again, Lizzie, you want the big numbers. Tesla up 47% year on year in terms of their sales back in April, and BYD up 115%. Now, we should say, Lizzie, that Tesla last year, you'll remember, is when Elon Musk was part of Doge. He was having these sort of interviews with Alice Weidel in the AfD in Germany. A lot of negative sentiment in Europe about Elon Musk at that time. So potentially, those sales were crashing last year. A bit of the base effect there. But really interesting is looking at the battle of the BEVs, the battle of the BEVs in terms of market share in Europe. Tesla has almost 2% of the market share in Europe. BYD now at 2.2% of the market share, and SAIC about 2.5%. So all of these electric car makers gaining market share in terms of what they own. And Lizzie, just one more stat for you as before we go here. The big number that we have today, and I was pouring through the numbers, and I just had to bring this to your attention. Jaguar sales in the month of April, they sold one car in Europe.
Right, okay. Not great for Jaguar then. Ollie, thank you very much for taking us under the hood of those European car sales. That's our chief European correspondent, Oliver Crook, with all the numbers. Now, to some other stories we're watching for you this morning. The Trump administration has reached a deal with Volvo Cars, allowing the automaker to avoid a US ban on Chinese-linked connected vehicles. Volvo, which is majority owned by China's Geely, of course, says that it received special authorization from the Commerce Department to continue selling connected cars in the United States. The restrictions are part of a broader American national security concern over Chinese technology. Meanwhile, Bloomberg understands that Taiwanese prosecutors suspect that 3 individuals successfully smuggled at least one shipment of NVIDIA AI chips to China after first exporting them to Japan. The trio was detained last week for allegedly falsifying documents related to exports of Supermicro computer servers containing advanced NVIDIA chips. Taiwan authorities haven't accused NVIDIA or Supermicro of any wrongdoing. And ousted BP chairman Albert Manifold has hit out at BP over what he described as a false narrative surrounding his departure from the British oil major, saying that he was removed without warning or explanation. BP says Manifold was fired because of serious concerns related to governance standards, oversight and conduct. People close to BP told Bloomberg that there had been complaints about aggressive behaviour by Manifold towards colleagues, as well as claims that he handled sensitive information, mishandled that information and sought to bypass the board of directors in decision making. So those are some of our top corporate stories this morning. Coming up in just a moment, we're going to turn back to the UBS Investment Bank's Anna Titareva is going to join us to talk about the latest on Europe's economic outlook. Stay with us for that. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Joining the trillion-dollar club, a breakneck surge in memory chip makers powers global stocks to a record high as SK Hynix and Micron pass the valuation milestone. Oil, meanwhile, dips as US officials continue to claim progress in talks with Iran, even as the status of the Strait of Hormuz remains uncertain. And Paxton picks up the primary. President Trump's choice for the Texas Republican nomination thrashes his opponent, the first defeat of a sitting senator in the state since 1970. Well, a very good morning. Welcome to the programme if you're just joining us, 6:30 a.m. here in London. This is the picture in markets this Wednesday morning. The easing geopolitical tensions boosting stocks around the world on the hopes that inflation pressures will ease. But Asian stocks in particular up more than 1% at this point, fueled by the chip rally. Yesterday we saw the S&P notching that fresh record. So this is going global, and we've got futures higher on both sides of the Atlantic. Just in the case of S&P E-minis, up 6 basis points as things stand. But flip over to the cross-asset picture. You can see Brent is now down 1.5% at $98.11 the barrel. So we're keeping an eye on the progress in the Middle East talks, but also the overnight strikes, the former seeming to outweigh the latter in the minds of oil traders for now. Treasuries holding on to gains. 447 is where we trade on the 10-year, just down a basis point. And the yen there at 159 per dollar. Traders on alert for potential yen intervention. Time now. Let's look at our front pages this morning. The Financial Times, first of all, leading with the latest from BP and the removal of Albert Manifold. So they're quoting an insider claiming that the ousted chair was engaged in bullying at the oil major. Manifold has called the allegations a false narrative. And then if we flip over to the Wall Street Journal, what do they have today? They're focusing on the big US political developments overnight. Trump backing Ken Paxton, and Paxton sealing that Texas Republican Senate nomination, defeating longtime incumbent John Cornyn. Historic victory there. And then here in Europe, we look to Le Monde in France. They're leading on the heat wave, of course, affecting much of Europe, with a headline saying that France has never experienced a day in May as hot as it has seen this week. And boy, are we feeling it this morning. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Well, I hope you're all keeping cool. Let's turn to some other stories we're following this morning in the world of central banking in particular. New Zealand's central bank has kept interest rates unchanged in a 3-3 split decision that was only resolved by the governor's casting vote. The currency jumped as the decision bolstered bets on the rate hike at the next meeting, and as the Reserve Bank's new forecasts indicate the chance of at least 2 25 basis point hikes before the end of the year. Meanwhile, if we look at the Bank of Japan, Governor Kazuo Ueda says that the oil price shock is a broader test of the entire inflationary regime. Speaking in Tokyo, he gave no hint of how that dynamic might influence the outcome at the next month policy meeting.
Japan's experience shows that oil price shocks are never just oil price shocks. They are tests of the entire inflation regime, or the boundary between temporary and persistent inflation is not mechanical. A temporary shock can become persistent if it changes wages, expectations, and price-setting behavior.
So let's continue our global tour of central banks with the ECB, a June rate hike increasingly looking likely for the European Central Bank. Traders pricing a near 90% chance of a move higher. And indeed, we've heard from Isabel Schnabel, one of the board members, calling for a hike in an interview just this week. Let's get analysis now. We can speak to Anna Titareva, pan-European economist over at UBS Investment Bank, who I'm pleased to say joins me now in studio. Good morning to you, Anna. So, if we get a peace deal in the Middle East, are we really going to need this June hike from the ECB?
I mean, starting with our baseline, we do expect the ECB to hike in June. In fact, we expect another ECB hike in September. When it comes to the June meeting, as you mentioned earlier, we've heard from a number of governing council members pretty clear indications that June hike is on the table. We also, if we go back to the previous ECB meeting, we also need to remember that the hike was already discussed back at the last meeting. So when it comes to the immediate decision for June, it seems pretty clear which direction we're heading. However, we do acknowledge that there is still a lot of uncertainty when it comes to the rate trajectory after the June meeting.
Yeah, because you say that there haven't been any major energy spillovers into underlying inflation so far. So why are follow-up hikes necessary if we get a peace deal?
Yeah, so I mean, the million-dollar question for the ECB is all about second-round effects, or the risks that the current energy shock spills over more broadly, especially when it comes to wages and more persistent part of inflation, services inflation. And we know that when we see that evidence in the data, it's essentially too late. So from the ECB's perspective, they will need to react ahead and they will need to react sort of against any potential risks. So they are seeing some worrying signs, especially when it comes to inflation expectations from both companies and consumers. So there are some concerns about spillover second round effects, and this is what we think is driving the current relatively hawkish narrative.
And when you dig into the numbers, Anna, do you think that Germany's fuel tax cut is maybe masking a broader Eurozone inflation problem? Is that partly why you're looking at hikes?
So, I mean, I think we need to distinguish between very near-term inflation developments versus, 6 months out. When we look at the next inflation print, we did say that the temporary tax cut for fuels in Germany will play a role. So we actually expect a small month-on-month decline in fuel prices. Headline inflation, however, will still rise to 3.2%. Now, we think that after May, inflation might stabilize. But what's important is that we think that there will be sort of indirect impacts that will take a bit of time. So in our inflation trajectory, we actually have sort of inflation picking back up towards the end of the year, when we expect to see goods inflation and food inflation starting to pick up.
OK, interesting. Turning to the BOE, though, because you see the Bank of England holding through 2026 and then cutting in 2027. That's different to what the market's looking at. They're pricing in 2 hikes this year. So wouldn't it damage the BOE's credibility to go with your predicted path when they've already sounded so hawkish?
Yeah, so, I mean, since the start of the conflict, our view has been that the next policy move from the Bank of England is more likely to be a cut rather than a hike. This has to do with the different starting point for economy, for activity, also the fact that labor market has loosened quite a lot, and also, very importantly, the starting point for monetary policy. Also, when we put Bank of England in the context of the ECB at 3.75, the policy rate is still restrictive. So when we look at the macro fundamentals, we think that for the bank to address risks of second round effects, it would be sufficient for them to keep rates at current restrictive levels for longer. But going to your point about risks of credibility, we said that we do acknowledge that there is still a fresh memory of the experience of 2022 when the bank was heavily criticized for being too slow, too late. And we do think that this memory still plays in the sort of policy response of the bank, and also contributes to the hawkish bias of the bank. So when it comes to risks of interest rate hikes, we said we don't think it's zero probability, but we still view that path more of a risk case rather than the base case.
OK, interesting. And just turning to the fiscal as well, because, of course, we've got all of this speculation about who's going to replace Keir Starmer as Prime Minister. Is it inevitable that whoever it is going to raise taxes?
I think there is still a lot of uncertainty. We still need to hear what comes, from the when or if we enter the leadership challenge, what comes from the candidates. Our view has been that if we do end up with a change in the leadership of the Labour Party, the party is very likely to move more towards the left. We also did say that there are increasing spending pressures on the government, especially in the context of defense, of energy support measures. Just to flag that so far the energy support measures have been quite small. So we do think that there is growing pressure to deliver something more, especially going into the winter heating season. So in this context, it does also seem that there are also growing pressures to, if you want to stick with the fiscal rules, you also will need to increase some of the revenues. And I think in this context, discussion about tax hikes will come back.
And then it becomes a question of what will those tax hikes be? And you've got Wes Streeting, the former health secretary, saying that it would be a wealth tax that works. I wonder what that is, and really whether it could work if you just have, the wealthy sitting on their investments, sitting on their property gains until another government reverses the policy.
I think that takes us back to the discussion ahead of last year's budget, because if you remember, it was a very similar dilemma where we knew that fiscal headroom is running low, so there was pressure to increase revenues. And of course, we need to remember that if the government wants to stick with the pre-election promises, they're quite restricted in terms of taxes that they can essentially go to in order to raise revenue. When it comes to wealth tax, I think the example of the non-dom regime change gives us somewhat mixed evidence on how successful that could be. I mean, this is all to say that I think when we head to this year's autumn budget, the government will be facing very similar challenges to what we saw last year in terms of what taxes and what taxes specifically and how efficient any potential tax increases could be.
Yeah, whoever that chancellor may be when we get to that autumn budget. Anna, great to see you. Anna Titareva, pan-European economist over at UBS Investment Bank. Thank you very much. Well, staying with the central banking theme, Bloomberg opinion columnist and former New York Fed President Bill Dudley says that the US central bank risks losing credibility over a prolonged failure to bring inflation back to the 2% target. Dudley told us there's a growing risk that inflation expectations become unanchored.
I think the problem here is that we've been above the Fed's inflation target for more than 5 years, and there is a risk that inflation expectations do finally become unanchored. And the University of Michigan preliminary result last week showed that 5 to 10 year inflation expectations did tick up quite markedly. Chris Waller's focused on the 2-year inflation outlook, 2 years forward. That's also moved up. So I think the Fed is concerned that they're starting to lose credibility because they haven't been able to get inflation back down to 2%.
How much is this Fed sort of conditioned by the pre-pandemic reality of low rates in a way that has made them overly dovish to meet the moment? And frankly, having to reconcile their overly dovish stance with fundamentally stickier inflation as a reality?
I agree with that. I mean, I think that if you look at the level of real rates prior to 2007, the real rate embodied in the Taylor rule, for example, is 2%. The Fed's assuming today that the level of real rates adjusted for 2% inflation is 1%. So it's very possible that monetary policy today is not restrictive at all because real rates are higher. And there's a reason to think that real rates are higher. Look at the investment spending boom caused by the AI. That's raising real interest rates because it's increasing the investment demand in the economy. The fiscal path of the U.S. is also raising real rates because it's diminishing the supply of savings available for investment. So I think there are good reasons to think that real rates are higher than they have been in the recent past.
When you have Christopher Waller saying that his current policy position is to hold rates steady for the near term because policy risks have changed, do you find it interesting that he was able to look through the potential tariff impact on inflation, but he's not when it comes to the oil shock?
Well, I think they're really the same in terms of both being likely to be transitory. The real question, though, is how does it get bodied in inflation expectations? And I just think the Fed is sort of pushing the limits of their credibility to claim that, trust us, that we're going to get inflation back down to 2% when we haven't been able to do it for the last 5 years. So I think he's getting nervous that they can't sustain this. There's also a big risk here. I mean, Kevin Warsh is coming in. The president wants lower interest rates. So you can see all the elements in place where the Fed should, tighten rates sometime later this year, and they don't because of the pressure from the president. So the questions about the Fed's independence, how willing Kevin Warsh would be willing to buck the desires of the president, also weigh into this situation. So I think that if the Fed's independence wasn't under question, then it'd be more likely that inflation expectations would stay well anchored.
Former New York Fed President Bill Dudley speaking to Bloomberg's Lisa Abramovitz and Anne-Marie Hordern. Well, coming up, we'll dive into AI, lower value human capital. Those comments by the Standard Chartered CEO on AI and jobs triggered quite a stir in the banking world and beyond. We'll take a look at the wider commentary next. This is Bloomberg.
I think it's more more about productivity and capacity. Now, if we can use that capacity to serve our clients better, gain more share of wallet, grow faster, grow more, then the impact on costs and jobs is going to be less. Now, if we cannot, and this is an industry-wide topic, then of course it will have ramifications and implications on costs and jobs.
That was the UBS Asia-Pacific President Iqbal Khan speaking to Bloomberg, warning that artificial intelligence is going to have an impact on jobs, but also has the potential to free up capacity and improve productivity. So let's bring in Bloomberg's Charlie Wells, because I wonder, Charlie, how those comments fit with this broader, evolving and seemingly escalating commentary on AI coming from executives. Who could forget Bill Winter's commentary?
Lizzie, that's exactly right. And I think escalation, as you mentioned, is really the key word here, because what we are seeing really is a shift in the way that some of the most powerful executives on Wall Street are talking about AI. You had those comments from Bill Winters talking about lower value human capital potentially being replaced, which he had to apologize for, but also some heated words really coming from Georges El-Hedary at HSBC about how AI could destroy certain jobs. So a shift from some skepticism to a real embrace here, even just in the past few days. Let's flip and take a look at some other commentary as well, from Jamie Dimon talking about hiring more AI people, as well as Venkat here from Barclays talking about investing in the technology, but also the people. Now, this gets at that broader question of, to what degree will AI replace jobs? How vulnerable are certain jobs to AI? Well, if we look at this framework that Bloomberg Intelligence has just put out, you can see some really helpful questions being asked here. And basically what analysts there did is they looked at the tasks that a job has, and they define a job being exposed to AI if half of the tasks in that job could be done in half the time with the help of a large language model. Now, look at the sort of jobs that are more exposed to AI. You get a lot of roles in the finance sector, where if you go down the economy, if you look at more of the manual jobs in an economy, you see them being less exposed. So the likes of kitchen helpers, mining laborers, and construction laborers, you can take this framework and extrapolate it out over an economy. So let's flip and take a look across the world to see which economies are more exposed to AI. So when you flip, you see the like of the Netherlands coming out near the top, the UK as well, where there are a lot of knowledge workers with jobs exposed to AI. On the bottom, you've got the likes of, say, South Africa or Nigeria, where there's more manual labor. Now, this brings a lot of questions about policy, a lot of questions about the economic trajectory, and also morality. And now this is really striking, talking about rhetoric, because just this week we got Pope Leo publishing his first encyclical mentioning AI front and center, talking about embracing some of this technological progress, but also keeping humanity, about keeping human dignity front and center. Now, this just speaks to the degree to which this debate is live, to which it is evolving, and to which we are certainly going to hear about it in the days, weeks, and months ahead.
Even the Pope is on this issue. Bloomberg's Charlie Wells, thank you for taking us through all of that commentary and the latest updates. Now, let's turn to our big take today. Sanctions were expected to weaken domestic Russian airlines, starving them of spare parts and repair expertise. But that script just isn't playing out. And it's the story of today's big take. The headline is, Russian airlines skirt sanctions to keep their jets flying. And we can speak now to Kate Duffy, Bloomberg's aerospace reporter, on the byline for this big take. So, Kate, just talk us through the tactics that Russian airlines are using to circumvent the sanctions.
Well, from the data and the documents that we've reviewed over almost a year, it's clear that Russia is funneling aircraft parts made for Boeing and Airbus jets through friendly countries such as India, Turkey, the UAE and Kazakhstan. And these aircraft parts, namely, are coming from Western countries, or that's where the pipeline starts. So our article hones in on two examples of this, one being a Luxembourg aircraft parts trader called Valer Asset Solutions. And this company arranged for two CFM engines, so those fit on under the wing of an Airbus jet, to be sent from storage in Canada to a buyer in India. But actually what VAS didn't see coming was that these engines would eventually be sold on to Russia, a Russian airline. They say they were duped, that they weren't aware that this was going to happen, but ultimately it did. did, and the exports, they say, were in a blatant violation of the contract between them and the Indian company that they sold it onto. So often companies in these friendly countries, they're allowed to sell to Russia, but they're known as one-day companies. So it really brings into question sort of the effectiveness of Western sanctions on Russia.
Yeah, and actually it seems like it's a good time for the Russian airline sector when you look at the data.
Yeah, well, after Russia invaded Ukraine, there were many expectations that actually the sanctions that were put on by the West would really impact the aviation sector there, and that actually we would see sort of a demise of the Russian fleet. But what our research has shown is that actually the number of Airbus and Boeing aircraft in Russia's fleet has seen a very minimal decline since 2023. And Russian carriers, they're flying as many passengers as they did before the war. And also exports of aircraft parts to Russia have actually increased after the war. So this is really aided by the smuggling that is happening through these friendly countries. And the experts that we spoke to also said, we don't know how long this is going to happen for, and it could potentially keep the Russian fleet alive for as long as it can keep going.
OK, Kate, it's a fantastic read. Thank you for bringing us that big take this morning. It's available on the terminal and, of course, on Bloomberg.com. Bloomberg's Kate Duffy. Now, we've got plenty more coming up. Terminal charts to frame your day, so stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London. And just want to bring you a few terminal charts to frame your day ahead, starting with oil. And you can see how volatility has been absolutely crushed. We are getting back to pre-war territory as we appear to be on the cusp of a potential deal between the US and Iran, or at least hope building for that. But flip the board and you can see the impact on treasuries, because we've been flirting with this long-run technical level, really fighting with it, 447 on the 10-year, and that overall adding to an atmosphere of easier breathing. Finally, though, flip over and we can see how the US consumer is standing up to all of this. Yes, consumer confidence edged down in May, but even if they feel worse, the consumer is still spending, and not just spending on needs, but also on wants. Bit of good news. Well, the opening trade's coming up next. Jemana and Tom will take you to the open. This is Bloomberg.